Think real estate is only for the rich, or that you need years of experience to start making money? It's time to shatter those myths. You've probably heard some of the most common real estate truths, but what if they're actually holding you back? The world of real estate investing is full of misconceptions that can make it hard for beginners to get started. From thinking you need massive amounts of capital to worrying about being stuck with a property forever, these myths can steer you away from making informed decisions. In today's video, we'll break down the most common real estate myths and show you the truth behind them. If you've been hesitating to dive in, this will give you the clarity you need to start your investment journey today. Real estate can seem intimidating, especially when you're just starting out. With so many conflicting opinions out there, it's tough to know what's true and what's just noise. If you've ever wondered whether you need to be rich or have tons of experience to invest in property, you're not alone. But the real issue is that these myths often hold people back from making smart decisions, and ultimately, they miss out on opportunities to build wealth. Let's kick things off with one of the biggest myths. Myth number 1. You need a ton of money to get started. This is one of the most common beliefs, but it's simply not true. While having a large amount of capital can make some aspects of real estate investing easier, it's definitely not a requirement to get started. In fact, there are a number of ways to enter the market without having to break the bank. For instance, you can consider house hacking, a strategy where you buy a multifamily home, live in one unit, and rent out the others. The rental income from the other units can cover your mortgage, and sometimes even leave you with extra cash in hand. This allows you to start building equity while living in the property, essentially making your home pay for itself. In many cases, the cost of owning a multi-unit property can be lower than renting a traditional apartment, especially if the other units are generating significant rental income. Additionally, there are creative financing strategies like seller financing, where the seller acts as the lender, or using a hard money lender who gives short-term loans for rehab projects. These alternative funding sources can help you avoid traditional banks and secure financing when you don't have enough personal savings. Hard money lenders, for example, are more concerned with the value of the property itself than with your credit history, making them an option for investors without substantial capital. Another approach to getting started without much money is by joining real estate investment groups or partnerships. Many experienced investors are looking for partners to split the costs and responsibilities of a property. If you bring something to the table, whether that's time, property management skills, or knowledge about a particular market, you can secure a piece of the investment without needing to provide the bulk of the capital. These partnerships can be an excellent way to enter the real estate market without shouldering the entire financial burden yourself. But even more than that, there are ways to invest in real estate with little to no money down. Some investors use strategies like lease options, where you control a property for a set period before you buy it outright, or wholesaling, where you secure a property under contract and then sell that contract to another investor for a fee. These methods can be used to get involved in real estate without ever needing to own the property directly. So, if you've been thinking you need to wait until you have hundreds of thousands of dollars saved, think again. Real estate investing can be accessible, even for beginners with limited capital. Myth number 2. Real estate investing is too risky. Let's be honest, any investment carries some level of risk, but real estate, when done correctly, it's actually one of the safer bets. The key to minimizing risk in real estate is thorough research, careful planning, and taking a conservative approach. Unlike stocks or cryptocurrency, the value of real estate tends to rise over time, especially in growing markets. Sure, there may be market fluctuations, but real estate's long-term trend is usually upward. In fact, even during downturns, the real estate market tends to recover relatively quickly, and people often look to real estate as a safe haven during times of economic uncertainty. During the 2008 financial crisis, for example, many investors lost money in the stock market, but those who had invested in real estate and held on to their properties were often able to weather the storm and recover in the years that followed. Plus, real estate has the added benefit of being a physical asset. You can't lose it in the same way you can lose digital investments or paper assets. Even in a downturn, you still have a tangible property that can be rented out for income. That's why many investors consider real estate a reliable hedge against inflation and market volatility. Of course, that's not to say there's no risk involved. It's crucial to do your due diligence before purchasing any property. This includes studying the local market, understanding property values, and analyzing potential cash flow. But if you're taking the time to research and ensure you're making a smart investment, the risks can be significantly minimized. It's also important to have a financial cushion in place. Having reserves to cover unexpected expenses, like major repairs, vacancies, or periods of market slowdown, can help you avoid stressful situations when things don't go according to plan. The more prepared you are, the less risk you'll face in your investment journey. Myth number 3. You need years of experience to succeed. This one might be holding you back more than you realize. Sure, experience is valuable, but you don't need to be a seasoned investor to get started and make money in real estate. In fact, many successful investors got their start with little to no experience, relying on education, mentorship, and hands-on learning. Real estate is one of the few industries where you can literally learn by doing and build a successful career, even without years of prior experience. Many investors start by purchasing their first property and learning as they go. There's no secret formula that requires decades of experience to be successful. All you need is a willingness to learn and an ability to adapt to different market conditions. If you're willing to put in the effort to educate yourself and seek out guidance from people who know the ropes, you can jumpstart your investing career today. There are plenty of online courses, books, podcasts, and YouTube channels like this one that break down everything you need to know. Networking with other investors and finding a mentor is also a great way to fast-track your learning. While experience certainly helps, don't let the idea that you need years of it before you can invest stop you. Real estate is all about taking action and learning as you go. In fact, some would argue that the best time to start is right now, while you're still in the early stages of your journey. Additionally, technology has made it easier than ever to get involved in real estate investing. Websites like Zillow, Redfin, and Realtor.com allow you to research properties, analyze comparable sales, and understand market trends, all from the comfort of your own home. With access to this data, even someone with no prior experience can make informed decisions. Myth number 4. You'll always lose money on your first property. Another myth that keeps many new investors on the sidelines is the idea that everyone loses money on their first deal. Sure, mistakes are part of the process, but losing money isn't inevitable. In fact, with the right planning and mindset, it's very possible to make money on your first property. The key to a successful first deal is focusing on the fundamentals. Buying in a good location, making sure the property is priced below market value, and ensuring there's potential for cash flow. You also want to make sure you're not over-leveraging yourself, which can create unnecessary risk. It's crucial to run the numbers on any property you're considering. Make sure you know what your monthly mortgage, property taxes, insurance, and maintenance costs will be, and be realistic about how much rent you can charge or how much the property could appreciate over time. If the numbers make sense, you're much more likely to end up with a profitable investment. But mistakes do happen, and it's important to approach your first deal with a learning mindset. If you buy a fixer-upper that ends up needing more repairs than you expected, that doesn't mean you failed. It just means you need to adjust your plan, cut your losses if necessary, and learn from the experience. Real estate is a long-term game, and as long as you're taking steps to minimize risks, you can certainly make money on your first deal. Myth number 5. Real estate is a full-time job. This myth is often repeated by people who don't understand the flexibility of real estate investing. Yes, managing properties and overseeing a large portfolio can be time-consuming, but you don't have to be hands-on all the time to be successful. Many real estate investors build passive income streams by hiring property managers to handle day-to-day operations, allowing them to focus on scaling their portfolio without sacrificing time. In fact, one of the most appealing aspects of real estate investing is that it can be structured to fit your lifestyle. If you're looking for a part-time income or to generate passive income over time, it's absolutely possible to do so without quitting your day job. There are plenty of ways to automate or delegate tasks, and technology has made it easier than ever to manage your investments remotely. While some people may choose to dedicate all their time to real estate, that's by no means a requirement. Whether you're looking to build wealth part-time or full-time, the flexibility of real estate investing is one of the main reasons it's such a popular choice. If you want a more passive approach, consider working with a property management company to handle everything from rent collection to maintenance requests. You can also leverage modern tools and apps to track your properties and streamline communication with tenants. Over time, you can build a portfolio that requires minimal involvement while still generating significant cash flow. It's time to take action. You now know that the myths surrounding real estate investing are just that, myths. If you've been waiting for the perfect time or thinking that you need tons of money, years of experience, or the ability to quit your job, the truth is those things are holding you back. Real estate offers opportunities for everyone, regardless of where you're starting. All it takes is a little research, the right mindset, and the willingness to take that first step. To sum it up, real estate investing is not as complicated or out of reach as many myths suggest. With the right knowledge, strategy, and mindset, anyone can get started and start building wealth. Don't let these misconceptions keep you from exploring this lucrative investment opportunity. Now that you know the truth, it's time to take the plunge and begin your journey toward financial freedom. Ready for top real estate investing secrets? Subscribe now and get the game-changing info in the description.